Ladies and gentlemen, good day and welcome to earnings conference call of Fratelli Vineyards Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you, and over to you.
Thank you, Yashashri. Good afternoon, everyone, and thank you for joining us today on Fratelli Vineyards Q1 FY25 webinar and question and answer session. We are joined today by senior members of the management team, including Mr. Gaurav Sekhri, Managing Director, Mr. Aditya Sekhri, Executive Director, Ms. Pooja Sekhri, Executive Director, Mr. Rajesh Garg, CFO, and Mr. Hemant Arora, GM Strategy, Finance and Analysis. We shall commence with views from Mr. Sekhri on the strategic performance of the business and Aditya on the financial highlights. This shall be followed by an interactive question and answer session. Before we begin, I would like to state that some of the statements made on today's call could be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation that was shared with you earlier and is also available on the stock exchange website. I would now like to invite Mr. Sekhri to make his opening remarks. Over to you, sir.
Good afternoon, everyone. Thank you, Siddharth. Am I audible?
Yes, sir, you are. Please go ahead.
Okay. So good afternoon, everyone. On behalf of the entire management team, I would like to extend a very warm welcome to all public shareholders of Fratelli Vineyards to our first quarter earnings call. We join you today as one of India's finest winemakers and the second largest Indian wine business. Our journey commenced in the year 2007 in Akluj in Sholapur district of Maharashtra, with the coming together of 7 brothers from 3 families and 2 countries. The venture was conceived and led passionately by my younger brother Kapil. Very early on, he made a commitment to make the finest Indian wine that can put India on the world wine map. Very tragically, we lost him in 2020. We continue to be inspired by his passion and build on the strong foundation he made for Fratelli. We are a family-driven business that is professionally managed. We are the only wine business in India which is undertaking active farming of land, as we firmly believe that good wine is made in the vineyards and not in the cellar. Our public journey began as we completed the share swap with Tinna Trade earlier during the year. Tinna Trade, which is the holding company of Fratelli Wines, has now been renamed as Fratelli Vineyards Ltd. Tinna Trade was in the business of trading agricultural commodities. As per a shareholder-backed plan, we are winding down the trading activities and shall singularly focus on the business of wine, winemaking and vineyard tourism. While in Q1, the trading business of the listed entity contributed approximately 100 crores in revenue, this will reduce dramatically in Q2 and will be completely shut down in Q3. Before I share my perspectives, I would like to introduce my members of my team, leadership team who are joined by me today. I have Aditya Sekhri, who drives business development for Fratelli and its brands. Pooja Sekhri, who manages brand communication and marketing. Rajesh Garg, our CFO. Hemant Arora, our head of strategy and analytics. For those of you who would like to refer to slides, we have an earnings presentation uploaded on the website, and the same is also available on the stock exchanges. We would now like the opportunity to talk you through our presentation. May I request the moderator to please have the presentation ready. So our contents of our presentation is to give you an introduction about us, our growth strategy, how we are ready to scale up, a quarterly review of the numbers and our journey of growth. Next, please. The unique part about our business is how we have complete ownership of grapes to bottle value chain. This is a very unique model and approach that we have deployed in India by undertaking active farming. We firmly believe, as I mentioned earlier, that best wines are made at the vineyards and not in the cellar, and that is why we are very, very clear on our investments into the vineyards. We are building a wine consumption lifestyle. That's our focus, and we believe that India is at a very early stage of its journey of wine consumption, so a lot of work and effort needs to be done in this space. Next, please. This shows a little bit of our history, how we started, how we planted our first vineyards, when our first bottles of wine was out in the market in 2010, and we kept adding to our portfolios. A marquee event for us was the launch of Sette, our best-selling wine brand, which one of the famous winemakers in the world commented that Sette to India will be what Opus One was to Napa Valley. This comment was made by Stephen Spurrier, and along with that, we kept improving and expanding various wines to our portfolio, expanding capacity, and in 2020, we also entered into the wine in cans category. Next, please. The wine business, I would like to share, is a business which has a very strong moat in the form of entry barrier. This is a business which takes a long time to do well, because one has to be in control of vineyards, and then once you have a handle on how to cultivate grapes effectively, one starts producing wine and then start building a brand. So the entry barrier to this business very clearly is time, and it's relevant to mention how we are now the second largest brand in the country and about 4 times the size of the number 3. Certainly, our complete control of grapes to wine enables us to make the highest quality of wine. We have now, over 15 years, developed a skill to build good, powerful brands and become a pan-India business. Our deep relationships in the HoReCa segment are a key advantage that we have on our side, and that has now resulted in us having 22,000 touch points pan-India, including the Army Canteen and leadership in certain states like Delhi, etc. Next slide, please. I would like to now pass on to Aditya, who will talk you through our portfolio and the remaining part of the presentation. Over to you, Adi.
Good afternoon, everyone, and thank you for taking the time out and being with us on this interaction. I will now walk you through our portfolio, growth plans, and our financial and operating progress. Given that we're doing this for the first time, I would like to step back and set some context through some slides. Please, next, please. So in our portfolio, we enjoy a strong presence in all segments with a major focus on premium and luxury segments. A quick run-through of our prominent offerings is included through slides 11 through 16. At this moment, we have the most diversified portfolio in the Indian wine market, with offerings available at all relevant price points to consumers. We have 5 ranges in our portfolio, first being the luxury range, which is presented here on this slide, which is above 2,000 rupees, where we're market leaders as well. Super premium is between 1,200 to 2,000. It's a growing category, and we're looking to re-innovate and introduce new brands every year in this segment. Premium, which is our largest, is between 600 to 1,200. And then we have the value segment for bottles, which is essentially between 250 to 550. We also have a very, very innovative segment in our portfolio, which is the can segment. It's our newest segment as well, and that's roughly between the range of 150 to 200 rupees, depending upon the state to state. In this financial year, we have renovated our Master Selection range and launched it in Q1. That's a development which I'd like to share. And this gives us a much needed and refreshed look to this range, along with the story that connects to us very closely. We have also launched a Pinot Noir, and this adds a much sought after varietal in our premium range. We are also working on an array of launches and renovations in the upcoming quarters, which are all poised to cater to various cohorts of consumers. Next, please. On the HoReCa business now, our brands are present in some of the most exclusive F&B brands in India and in select locations outside. We have created exclusive brands for some of these, including Swara for the Taj Group of Hotels, Ghungu for the ITC Hotels, and Amaris for Living Liquids, which is a leading premium retailer, all of with whom we enjoy very, very strong relationships. Within select states, we have leading market shares in the HoReCa channel as well. This includes markets of Delhi, West Bengal, Karnataka, and Odisha. This is, of course, where we have the excise data readily available to us. At an overall level, we have derived significant contribution from the HoReCa channel, and this share will continue to grow as, of course, new outlets keep opening year on year. Now a little bit on our growth and distribution and our penetration. The headroom to grow sales volume is extremely large. That's what we believe. At the close of the last financial year, we recorded sales of 500,000 cases and a revenue of approximately 217 crores. Since FY21, our volumes have increased at a CAGR of approximately 25%, 30% on a gross revenue basis, and 100% in terms of EBITDA. Our distribution capabilities have kept pace and have been developed to suit the underlying requirement of the market. Also, we have consistently invested in tech and digital capabilities to drive a very efficient and productive sales and distribution operation with real-time tracking of key actionables. Furthermore, there is a major traction in consumption across tier 2 and 3 towns for hospitality and modern retail, or what we call MTO brands. As these brands cater to the next set of patrons, we will be ready with our distribution reach. Having an edge in the HoReCa and the MTO channel will allow us to seamlessly extend our strengths into newer markets as these new outlets get inaugurated in new towns and cities. Another major focus for us going ahead will be building vineyard tourism. I would like to cover this in the following way. We at the moment have a small scale already going on with respect to vineyard tourism, but of course we are looking to expand this dramatically. Going forward, we are investing to open a 40 key multi-use property which will be spread over 170 acres at Akloj. This expansion will help us strengthen our brand visibility, enhance D2C selling, and add a supplementary profitability stream to our business. Now on our growth strategy. This strategy has 5 key pointers to it. Firstly, being an integrated winemaker, our investments foremost are being channeled into development of vineyard acreages. We are continually introducing and adapting select imported varietals into the country. Given the initiatives already underway, we expect to add incremental acreages to our ambit in the second half of the fiscal year. Correspondingly, we are ramping up winery operations with a view to further extend our lead and presence in the premium segments. Our planned capacities are expected to become H2 of this financial year. As shared earlier, in order to support the business of producing and selling a high-value, high-quality portfolio of wines, we are continuously investing in technology both at the manufacturing end and also across our sales functions. This advanced real-time tracking analysis and solution capability we are creating shall, of course, support us with incremental sales. I touched upon investments already in a new vineyard tourism property at Akloj. Phase 2 of this project will see an expanded base of operations as we create a dedicated avenue to offer our most premium selection to patrons. We have been conducting wine tastings across the country, and this should continue on a larger scale as our vineyard and bottling capacities expand. We are also on track to unveil investments in city-based outlets to promote wine tasting and D2C selling. By the time we address you for our H1 outcomes, we should be in a position to share more details around this. Lastly, our focus remains on maintaining a steady stream of brands in the premium and above range, backed by homegrown imported varietals. This will help us sustain the leadership momentum that we have in the segment. We are also looking at bringing to market innovative brands that will help us expand the appeal of the wine to newer audiences and also increase the TAM. A little bit on our awards. We have lifetime awards of which has crossed a very, very good number of more than 200 now. Just some recent updates. In this financial year itself, we were the first Indian winery to win gold and double gold awards at the Gilbert Awards, which were recently conducted. And we got them for our super premium wines, Junoon, Sete, and Master Selection, the only Indian winery to do so. Last financial year, we were the first Indian winery also to win gold for liquid and packaging in a canned wine competition, which we got for Tilt, which was a remarkable achievement. We got this last year, but I thought I should highlight. Over to the next slide. Of course, these are some other accomplishments which have been mentioned. Now I'd like to talk a little bit about our operating performance, both in the past and also about our Q1 results. So with complete control over our value chain, we have consistently strengthened the value share of the premium and above segment. If you look at our numbers for FY21, we had 70% contribution from the premium and super premium segments, and this has risen to 73% in FY24 on an expanded operating base. This growth is a result of continued development and introduction of new brands as well. Now to the highlights of our quarterly performance. During the first quarter, we have delivered revenues of approximately 45 crores relative to 46 crores for the same quarter last financial year. This does follow some challenges in availing permits owing to the disruption due to the general elections. And of course, that aspect has been resolved now in Q2. Q1 is also a seasonally off quarter, and we're already seeing, the other trends as well reverting to the norm. Our revenue guidance for the year, though, still remains at north of 15%. I'm also pleased to share that even with the adverse conditions that we had due to the elections, we have maintained strong margin momentum with respect to our gross margins. We are continuously investing towards brand development and augmenting middle management, and this is getting reflected in our EBITDA margins at the moment. As these investments take root, we expect a positive multiplier effect to add to the underlying business momentum. Now a little bit on our listing timeline. I think the slide is pretty self-explanatory, and I think our MD has already mentioned a bit on this. So I'll go to the next slide. Now a little bit on our journey of growth and us fostering, our natural moats in business that we have at the moment. So our integrated model gives us unique advantages to doing business. Since inception over 15 years ago, we have come to command a 30% market share in our industry today. Where time is a very powerful moat, as mentioned previously as well. There are few additional moats in the business that I will briefly look to touch upon today. We have imported now and adapted approximately 12 varietals from the best wine growing regions in the world, and have successfully cloned them as well. The process of identifying and incorporating new varietals is still ongoing. Our ability to maintain the tempo of agronomical research and development is a clear asset, supplementing our drive to produce exquisite wines that cannot be replicated over the next several years. As we look to the next level of growth, the benefit we have is that we have over 400 acres of active farming and approximately 1,400 acres overall which are under cultivation. This, along with favorable agroclimatics around our vineyards, works in our favor at the moment. These natural moats in business distinguish us and give us a strong lead in terms of operating excellence in business. Now, in terms of getting future ready, our existing capacity at the moment is roughly 4.5 million liters. This year, we are looking to expand that by approximately 25%, and that will be north of 5.6 million liters by end of this financial year. Of course, a lot of those things will be happening in H2 of this year. We have a manufacturing presence at the moment, both in the states of Maharashtra and Karnataka. A little bit on, how we've worked in Akloj, where our mother unit is as well in terms of manufacturing, and how we've kind of converted a barren land into, a proper area for, vineyards and their development. And also along with that, we've created a very, very strong ecosystem now for people in Akloj, which largely supports local farmers and creates large-scale employment, which is mentioned in this slide as well. 95% of all our packaging material at the moment is procured domestically, and that has been an improving trend for the last few financial years. And we have now been consistently rated in the top 100 vineyards in the world for the last 2 years as well. Now, on a record of our sustained performance over the last 3 to 4 financial years, our net revenue, as you can see, has grown at a CAGR of approximately 25%. Our gross profit at a CAGR of 26%. Our EBITDA at a CAGR of 100%, and our PAT, which is almost 300%. And these are some of the underlying levers which have been mentioned on the presentation as well. Next, please. Now a little bit again on the future. I would like to conclude by reiterating our story. We have a robust operating model that has been driving a consistent financial performance. Being a family-backed business, it is an asset in our industry, and with the help of an integrated presence, we will continue to have an attractive portfolio of brands. Having focused on investing in core capabilities, including the right talent, has a strong lever of growth. We are moving forward as we optimize and expand our reach to match the outlined growth and production capabilities as well. Hospitality and F&B chains are continuing to expand nationally, as I mentioned previously as well. This will be a tailwind for us, given our product mix tilts in favor of premium and above categories. We are laying the foundation of the next year of performance through directed investments. Plans have been outlined and are underway to augment capacities in vineyard tourism, and partners have been identified as well for the same, which we will of course disclose in the upcoming earnings calls. We are looking at introducing some new formats to explore in city opportunities for vineyard tourism as well. Fratelli now is one of the finest winemakers, and we are eager to be at our best. With that, I would request the moderator to open the forum for Q&A, and all of us here today will be happy to address queries from participants. The last slide which is mentioned, of course, gives a view of our 7 core pillars of our strategy, which are pretty self-explanatory as well. And now we'll be happy to answer any questions. Thank you.
Thank you, sir. We're now beginning the question and answer session. Participants connected on webcast link who wish to ask a question may click on live question tab on your screen. Alternatively, you may type your question in space below the ask a question tab. Participants connected through audio call are requested to press star and 1 to ask a question. If you wish to remove yourself from the queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a text question from Kamal Jeswani, U First Capital. The question is, grape growing business is consolidated in the company or not?
Hi, this is Gaurav Sekhri. Can you just repeat the question for me, please?
Yes, sir. The question is, grape growing business is consolidated in the company or not?
I don't fully understand the question. I think our business is, the industry is kind of consolidated, is the only answer I can think of. Otherwise, I didn't fully understand the question. Maybe he can please ask the question again.
Okay, sir. We'll take a question from Amruta Deherkar from Wealth Managers India Private Limited. Please go ahead.
Thank you for this opportunity. Could you please explain the term Fratelli owned clones and how different are these from the rest of the peer brands and the wineries in India?
Hi. So I believe you're asking about the Fratelli owned clones, right?
Yes.
Yeah. So essentially, what we mean by that is that we had begun initially by importing saplings from various, established wine regions like Italy and Spain. And over the last decade or so, we have made our own clones, which are better suited for Indian conditions. So that is what we mean by Fratelli owned clones.
The wines that are made by us are specifically for the Indian market.
Ma'am, may I request you to use the handset mode, please? The audio is not very clear.
Hello.
Hello.
Yeah, so is my voice audible now?
It is breaking a little, but you can go ahead.
So what I'm trying to understand is the products that we have, as in the wines that we make, they are better suited for the Indian customers only. As in India only, for consumption in India.
No, I think the way to interpret this is in the following manner, that the clones that we have made are better suited for cultivation in India.
Okay. And how is it different from the rest of the other grapes or the other grapes which the peer brands use?
See, we cannot comment on what other companies use, but there are many indigenous Indian grape varietals as well, which are used for making wine. for some of our premium and higher end wines, we believe we are unable to make such high quality with those Indian varietals. So therefore, we work with imported saplings, which have been cloned and made to adapt to Indian conditions.
My next question is regarding like what is the sales volume in million liters? How has the growth been from FY21 to FY24?
I'll take this. So our sales in million liters for last year was approximately 4.2 million liters. And our sales approximately, as I mentioned earlier, have grown at about 30% at a CAGR level over the last 3 odd financial years. So that's been the run rate.
My last question is, what is Fratelli doing which is different related to marketing and related to the kind of products that we have compared to the leader in the industry?
We have done, ma'am, various things which are firsts. For example, the Sangiovese grape that we grow and we sell wines as Fratelli Sangiovese Bianco. This is a grape which is grown in Chianti. All the Chianti wines from Italy are made with this grape. Now we are the first ones in India to have brought it and grown this grape varietal here. So those are the kind of innovations that we have done which has brought us to the current position. And we continue to do that. We just launched a new Pinot Noir grape varietal. We have recently just imported some new grape varietals which are yet to be planted. They have only just arrived. This will further expand our portfolio and bring some of these new wines to India, grown in India, which have in the past not been attempted here.
And my last question, are we the beneficiaries of the Maharashtra WIPS scheme? And then what kind of benefit do we get?
Yes, ma'am, we are. We operate in Maharashtra. Maharashtra offers a wine promotion scheme, and we are beneficiaries of it just like any other winery in Maharashtra.
Okay. My last question, which is our biggest market and what is kind of the market share that we have?
So our revenue split by region, I think is, and that's a big advantage to our mix as well, or our geographical spread, I would like to say, is that we don't have a high dependence on any one region. So the south, the west, and the north regions contribute handsomely, of course, to our overall top line, and they're all within the range of 25 to 30%. And then, of course, that's followed by the east region in number 4. That's the rough split.
Thank you. We'll take a text question from Rachna Kukreja. So basically, now we are in the range of 10% to 12% EBITDA margins. Can you just help us understand what going forward would be the steady state of EBITDA margins once the pace of brand investments slows down?
So our EBITDA for the last financial year was approximately 13.5%. And, like I said earlier, it's been an improving trend from the last 3 years. Every year we've seen, a decent jump year on year if you see at a percentage level. I think we're at a stage now where our major objective at a brand level, of course, is to grow the category, of course, and, with that, do necessary investments that are needed as well at a brand or a business level. So I think our, of course, business is well poised for growth, both at a top line level and an EBITDA level. I would not like to give a proper guidance as on today, but I think an improving trend is what we should expect year on year for the next three odd financial years. That's what we're looking at.
Thank you. Before we take the next question, we'd like to remind participants, those are connected on the webcast link and they wish to ask a question, may click on live question tab on your screen. You may also post your text questions. Participants connected through audio call may please press star and 1 to ask a question. We'll take our next question from the line of Tushar Vasuja from Yogya Capital. Please go ahead.
Thank you for the opportunity, sir. I have a couple of questions. First one is, what are your competitors across all your verticals like luxury, premium, and value? And what sort of sustainable EBITDA margins can you do? And will we be able to reach margins similar to our market leader at this point?
Sure. So thanks for that question. I'll answer that. So I think in terms of each segment, of course, the share varies, like you rightly mentioned as well. I wouldn't like to comment too much about, the competition or what they're doing, but, from our standpoint, and that's what the industry data tells us as well, is that in the super premium or the luxury